Welcome to the deep dive. We've got quite a mix of sources you sent in this time.
We do.
Looks like stuff on the tariff situation, um, a really long view comparing gold and real estate, and some advice for first-time homebuyers.
Right. So the idea is to kind of weave these together.
Exactly. Our mission here is to pull out the key stuff, help you make sense of the current economy, especially, how it connects to real
Just
estate.
connect the dots, basically. See how it might affect your decisions.
Okay, let's dive in. The tariffs first. It seems pretty clear these import taxes on things like steel, lumber, they're directly hitting the housing market.
Oh, absolutely. I mean, it makes building more expensive. Simple as that.
Right.
So you get fewer new homes going up, and, well, less supply means prices for existing homes get pushed higher. Directly hits your wallet if you're looking to buy.
And it's not just materials, is it? The sources mentioned labor costs, too, adding to inflation.
That's another layer, yeah. Labor's more expensive, and, when general inflation climbs.
Then mortgage rates tend to follow.
Exactly. So you could be looking at higher home prices and higher borrowing costs. Kind of a double whammy.
Yeah, that sounds tough. But one source brought up this idea of real estate as maybe a safer bet in uncertain times. Why is that?
Well, people always need somewhere to live, right? So demand is, relatively constant.
Okay.
Plus, it's a tangible asset, something you can actually see and touch. And historically, good properties tend to appreciate, potentially shielding you a bit from inflation, and there's rental income potential.
Ah, the income part. Got it. Now, these tariffs, they're not just about housing, are they? Creating ripples elsewhere.
Definitely shaking things up in the stock market, too. Uncertainty for big international companies makes investors a bit nervous, causes volatility.
Volatility, but that isn't always a bad thing for everyone, is it? Depending on your strategy.
Well, yeah. For someone investing for the long haul with a diverse portfolio, sometimes these dips can present, let's say, opportunities. But that's a whole different conversation.
Right. Okay, let's shift gears to that really long-term comparison. 200 years of gold versus real estate. What was the main takeaway there?
It was fascinating, actually. The big picture seems to be gold holds its value, sure, preserves wealth. But real estate, over that long stretch, has generally done a better job of building wealth, generationally speaking.
And why is that? More than just the house price going up.
Oh, yeah, several things. You've got potential cash flow from rent, which gold doesn't give you.
Right.
You can use leverage, a mortgage, to control a large asset with less upfront cash. Plus, the basic utility, you can live in it, or someone else can pay you to live in it.
Like that quote one source used.
Yeah.
Real estate puts money in your pocket. Gold doesn't pay rent.
That sums it up pretty well, yeah.
Oh.
Simple, but true.
Okay. So looking forward then, interest rates. What's the vibe from the sources? Any relief in sight?
There seems to be some cautious optimism, maybe a slight downward trend later in 2025, but it really hinges on inflation. That's the big if.
So the advice isn't necessarily wait for the perfect rock bottom rate.
No, not really. The consensus seems to be focus on finding the right house at a price you can manage. Trying to time the rate market perfectly is, well, tricky, maybe impossible.
Which brings us nicely to the specific tips for first-time buyers. What should you be thinking about right now?
First thing, get pre-approved for a mortgage, like now.
Why now specifically?
Because it tells you what you can actually afford, for one. And in this kind of fluctuating rate environment, you might be able to lock in a rate, giving you some certainty.
Okay, makes sense. And there was this term, house hacking.
Yeah, it's basically buying a property with multiple units, like a duplex or triplex, living in one unit yourself.
And renting out the others.
Exactly. The rent from the other units helps offset your own mortgage payment. It can make ownership much more affordable, especially starting out.
That's a clever strategy. Anything else for new buyers?
Yeah, don't just chase the trendiest, most expensive neighborhoods. Focus on finding value.
Value over hype.
Pretty much. Maybe look for sellers who are more motivated, Be open to areas that might be a bit overlooked but have good potential down the road.
Okay, let's recap quickly. Tariffs are pushing up building and housing costs. Historically, real estate's been a stronger wealth builder than gold, partly due to income and leverage. And if you're a first-time buyer,
get pre-approved. Seriously consider house hacking and hunt for value, not just trends.
right. So maybe the final thing for you, the listener, to think about is, how do these bigger picture things, the tariffs, the long-term investment trends, square with your own personal situation and goals right now?
Yeah, how do you take this sort of 30,000-foot view and